Hey everyone, happy Friday. I hope you're having a fantastic week. Let's go ahead and get you a portfolio update. And I'm really excited to cover a few things that we haven't covered in the past. And that's a more in-depth look at my Robinhood portfolio. So let's go ahead and start off with Robinhood. And for the week, things are not looking too bad. I finished at just over 0.2% for the week. That's a gain of nearly $800. If you've been following the market for week 7 of 2023, I don't want to call it doom and gloom, but there's definitely been some additional concerns about the economy, inflation, and whatnot. So I think that's kind of why we saw the week kind of start good and then finish down for the remainder of the week. So right now the portfolio breaks down to be $401,000. And a reminder, and I'm going to show this here in a moment, I do have a combination of obviously stock holdings and brokerage cash. Speaking of brokerage cash, I got to go ahead and give another shout out to Robinhood. Again, I am a Robinhood Gold member, so I do pay my $5 a month. But again, to be able to earn 4.15% interest, it's pretty fantastic. As you guys know, I am a hardcore dividend investor. But it's not to say that I don't want to have cash waiting on the sidelines to maybe take advantage of some stocks that reach target prices that I'm comfortable with. So in the meantime, all of my uninvested cash is at least earning interest, and it's almost like receiving a monthly dividend. Now, the 4.15% is the APY, right, which is annual percent for the year, but Robinhood does pay you out on a monthly basis. So even from the last week's video, you can see here that I have gone over the $30 mark, and I am set to receive at least $31.74, and they're going to be paying that out on the 28th. If I were a betting man, and as you guys know, I live in Las Vegas, I would venture a guess this will be closer to $40 come the 28th of February. So stay tuned on that. So let's go ahead and take a look at the investing tab of my Robinhood account. And truth be told, I didn't even know about this. I am such a bigger fan of using the application of Robinhood that I very rarely go to the web interface. And I just happen to see this in the investing tab. And it kind of gives you a breakdown of my total portfolio value. You guys can see here, it's still Friday. Trading hours have not yet concluded, so you're going to see this number slightly fluctuate. But I do have a total of $367K in stock and options, and then brokerage cash, I have $34,000, and this number kind of fluctuates depending on what I buy. I am running the wheel strategy on a few stocks. If you guys have been following that newer series that I put out, I'll kind of include a very brief update about how those numbers don't necessarily calculate into the options sheet that I'm going to show you at the conclusion of the video. This is kind of the newer view that you haven't seen before, and it kind of breaks down all of my holdings. I wanted to go ahead and sort this by the stock in which I hold the most equity. And you can see here, guys, it's not all great news, but I'm willing to own and sort of, have the transparency of what's working for me and what's not working for me. So my top 5 holdings regarding equity is going to be Tesla, Amazon, Microsoft, Apple, and Target. Those are my top 5. But go ahead and look at the total return on Tesla. Again, I may have $60,000 in equity, but I am still down a whopping 21K. The same goes for Amazon. I am down a whopping $18,000. Microsoft, Apple, I'm doing much better, and I actually am planning to hold these positions very long term. Target, the same thing. I plan to hold this very long time. It's a great dividend earner for me, but currently I'm down just under $200. Let's go ahead and sort by, everything that I'm currently in the green for. So this is my total return. And once again, I'll give you the top 5. Not too bad. Celsius, Apple, Starbucks, Microsoft, and IWM. Let's go ahead and now sort this by what I'm in the red for. And again, guys, full transparency, of course, I am not happy about this. I don't want to say I'm losing sleep because I am confident that Tesla and Amazon and even Meta is going to bounce up. Traeger is one that I'm not as optimistic about. Again, I go back to when I first began investing. I had this mindset, well, even if I don't know about the company, if I am a customer, right, that's enough for me to invest. And now that I've matured as an investor, I realize I should have done more research on just the fundamentals of Traeger's business. Had I done so, there's no way that I would have invested. You can see here my average cost, $14.38 38 cents a share. I own 319 shares, and currently Traeger is trading for 385. So I have a significant loss. This might be one of those positions, and I hate to say it, where I might buy more shares to average down and then maybe sell a covered call on, my 300, maybe 400, maybe 500 shares just to get rid of it. So stay tuned on that. I do plan on talking about Traeger a little bit more in the upcoming year. And then I've got Google as well. And Google, like Amazon, Tesla, and even Meta, I'm very optimistic. This one right here brings me no stress. So yeah, I'm down 3,200, but I feel very confident with the 200 shares that I own. This share price is going to go back up. So let's go ahead and pivot over to my M1 Finance. And for the week, you can see here, I fared a little bit better than Robinhood. My current return for the week is about 1.3%. That's nearly a gain of $1,500, and the current value of that portfolio sits at just over $120,000. If we scroll down and take a look at my slices, as you know, the heaviest weighted slice in my M1 is going to be that long-term hold slice at 80%. We're nowhere near that 80% threshold. So of course, when we get into the daily buys for the M1, everything is going to be focused on this long-term hold slice. But I want to go ahead and feature a couple of other slices that don't get much love from me in my weekly updates. And I think for this, we'll go ahead and focus on the ETFs. ETFs currently are at 14.6, so they are significantly overweight as far as the target percentage. And that's because I transferred quite a bit of ETFs into my M1 from Robinhood at the beginning of the year. So let's go ahead and take a look as to what is in my ETF slice. I've got JEPI, JEPQ, I've got SPY-D, I've got the fan favorite, SCHD, I've got Devo, which is a recent addition, VTI, SPHD, and VYM. Currently, I'm pretty content with the number of stocks that I have in here. I think we can always look to make changes on our portfolio. I'm very comfortable with saying, yes, I own a lot of stocks. Maybe there's even some duplication. I think it's more inclined to happen when you're looking at ETFs. But I want to give a shout out to the monthly payers out there, because when we talk about dividends for this week, I got to give a shout out to JEPI, JEPQ, Diva was on there, SPHD. These are my monthly warriors, so to speak, that are really helping me contribute more cash to what's that long-term slice, that target allocation of 80%. So I'm really excited about what I have in my ETF. And I thought, every week I won't just feature my buys and what the percentages are for the week. Let's just go ahead and talk about what's in these slices. Not a whole lot of changes have happened, but if they do, you'll be sure to get that update. So let's go ahead and focus on purchases made from the M1 account. Just to give you a quick recap, I contribute $50 every day of the week, Monday through Friday. That's a total of $250. Rather than go through every single trade from Monday through Friday, if you've seen these updates before, you know it's the usual 10 suspects, as I call them. So I'm going to go ahead and focus on Thursday's purchase, which has a total of 10 buys. And these are going to be pretty much what you're going to see, I think, for the foreseeable future. And I'm the first one to admit it's very boring. I wish I could tell you that I'm making all kinds of moves when it comes to what I'm buying in my M1. I am dead set on just buying stocks that are in my long-term hold slice. And it is very boring, but I really want to focus on quality this year and not quantity. So in no uncertain order, we've got AVGO, Walmart, Texas Roadhouse, UNP, we've got Esso, Lowe's, Mickey D's, ExxonMobil, Visa, and Johnson & Johnson. I want to mention Johnson & Johnson because we've seen the share price this week fall a little bit, and it has to kind of go to some of the news that's coming about the lawsuit that's out there. I still am a firm, and I'm going to be long on Johnson & Johnson for the foreseeable long future. And that's kind of the nice thing about the M1 daily cost averaging approach. When these quality stocks dip in price, you're taking advantage if you are daily cost averaging. And it goes back to the mindset, rather than me just making, a $250 buy on Monday, I like the idea, for example, Johnson & Johnson didn't really experience this dip until I think it was like Wednesday or Thursday. And so if I had purchased everything on Monday, I don't know that I would have been able to take full advantage of that declining share price throughout the week. So I'm not going to go through every day of the week. If you've been watching this channel, these are typically the 10 stocks that I am making purchases on. All right, let's go ahead and pivot to dividends received for both Robinhood and M1. We'll go ahead and kick things off by looking at Robinhood first. And I am just so excited. I'm going to point out Apple in particular. This has been a stock that I have been long on. So to be able to see my dividends slowly increase, I'm getting closer and closer to earning $50 per quarter. So bear with me, we'll get there. But things kicked off this week with Texas Instruments. They paid me $1.24. Enterprise Products paid me $25.38. Omega Healthcare paid me $8.71. Don't want to discount even Ally Financial. That paid me 30 cents. Of course, got to give some love here to Main Street Capital. They are one of my favorite monthly paying dividend stocks. I earned $22.50. Here it is, Apple, $46.12. That is from, and I think it does break it down if I click on this. Yeah, that is from holding 200 shares, and I am just so excited about this number. I am very much an Apple fanboy. I've got every Apple device you can think of, and I also subscribe to Apple's family music plan, which is $16.99. So going back to my, the idea of setting small goals to achieve big victories, nothing would make me happier for this dividend to, rise to the amount in which I could truly say, hey, my Apple Music subscription, which I pay again, $17 a month, that monthly amount is covered by the dividends that I receive throughout the year. So I'm really excited about my Apple dividend. I'd love to hear from you. Throw it down there in the comments. If you're holding Apple, how much did you receive in dividends, and how long have you been holding Apple for? And to go ahead and conclude, Friday the 17th, this is the last dividend that I received in my Robinhood, and that's going to be for Costco. You can see here I am working to get my shares up to 100. I got a ways to go, but that's okay. In the meantime, I am very much loving this dividend of 90 cents per share on a quarterly basis. So I earned $9.94. Okay, here we go. Let's go ahead and pivot over to M1. This by far is one of my biggest single weeks since having an M1 account. I opened it up, I think in August of 2022. And hands down, this shatters a record for earning the most dividends in a single week. And of course, it goes back to that transfer of a large number of stocks from Robinhood. And we're starting to see, this idea of these monthly paying dividend stocks that are in my M1, them really being soldiers to go out there and help me build up my long-term slice. So we'll go ahead and break it down. Beginning on the 14th, I earned 66 cents from ADC. CEQP, I earned nearly $97. So we've got the 47 cents here, and we've got the 96.94. CEQP, by the way, has been in my portfolio since I believe early 2022, and I am just thrilled about their dividend as well as their dividend yield. AbbVie, $7.02. This is also a monthly payer right here. Horizon Technology, $68.55. It's funny because I look at that number and I'm like, you know what? That needs to be $70. So don't be surprised if in the next few weeks I give you an update where I made a purchase on Horizon to get me across this $68.55 mark. Main Street Capital, same thing applies. It drives me crazy that this is not $25. It would not surprise me, so it shouldn't surprise you that sometime in the next few weeks I make a purchase of enough main stock to get me over the $25 a month threshold. Procter & Gamble also paid me $3.48. Again, the Mona Lisa, as my friend Ryan says, of monthly pairs is O Realty, $50. And if I'm not mistaken, they just increased their dividend. It makes me so excited to own 100 plus shares of O Realty. Stag is also one of my favorite monthly payers, $51.88. So before we show you the total amount of dividends that I have received in February of 2023, let's go ahead and talk about today's small goal, big victory. As you know, in every portfolio update, I am going to feature at least one small goal, one big victory. And as it turns out, today's small goal, big victory is the total amount of dividends that I have received in February of 2023. So this is what things look like at the conclusion of last week. And this is what things look like now after this week's update. A total of $634.64. So let's get into that small goal, big victory, because the total dividend amount is the big victory. I have not only eclipsed what I made January of 2023, I made $601.88. I have already surpassed that number, but February is not even done yet. But more importantly, I have been able to beat February of 2022 by nearly 300%. If we actually add up how much I made just in January and February of 2022, that amount for those 2 months was $621.15. Again, I know I'm having a moment here, but seeing these dividends come in this week, it was cool. It was really cool for me to see that this hard work is paying off. You know, I am a dividend investor, and I also invest in other, long-term holds and options and whatnot. But that dividend income, that passive income, it's just, I don't know, it just hits a little bit different than, things like options and whatnot. So let's go ahead and conclude by giving you a brief overview of all the options, that's cash secured puts and covered calls, that I wrote for this past week. I want to show you here, when we left off last week, I was just over $5,600 in total premium from covered calls and cash secured puts. Admittedly, this week has been a lot better than what I've been seeing the past few weeks. And it goes back to things are not skyrocketing in share price. Remember, when those share prices dramatically increase, it really causes me to have to roll my positions to further out dates. So far, year to date, I have sold a total of 137 covered calls. My gross premium is $4,200. If we look at the cash secured puts, things are going pretty smooth as well. And to be honest, if I'm going to be seeing a bull market, then I'm probably going to be selling more cash secured puts. And this week, I definitely opened up a few positions. So I have a total of 10 cash secured puts in 2023. And that has me looking at just over $2,000 in gross premium income. So let's go ahead and update the spreadsheets. Before I transition, take a look here at the total amount of covered calls, 127. The total amount of cash secured puts was 8. Let's go ahead and make the additions. So now we've updated the spreadsheet here for 2023. Hey, full disclosure, I do not understand how this happened, but I did not include a covered call from Main Street Capital in my January statistics. So you'll see this number change from 103 to 104. Obviously, changes happened to the February calls and cash secured puts. But I'm pretty excited about these results. Again, things are slowing down in the market, which when it comes to my covered calls, allows me to generate more of that consistent weekly cash flow. So to date, for the entire 2023, I have sold 137 covered calls. I have sold a total of 10 cash secured puts. When we total up both of those numbers, I have made exactly $6,300. Okay, so January and February, I think I'm off to a great start. One other thing I want to add, if you've watched my other videos, you know that I am wheeling two stocks, Celsius and Amazon, and I am not including the premium earned from Celsius and Amazon. I am not including that in this 2023 breakdown. So on top of the $6,300, I've technically earned a little bit more than that if I were to add what I've earned from doing the wheel on Amazon as well as Celsius. So thanks so much for following along. A lot of information came your way. I know that it's a longer video than normal, but I'm pretty hyped up, right? I had to kind of go into those dividends. I had to talk about these covered calls as well. It has, thank goodness, this week is looking a lot better than it did the first couple of weeks of 2023. So I'm more optimistic that I'm going to be able to generate more consistent weekly cash flow. Hey, if you found value from this video, or if you enjoyed the entertainment purpose of it, go ahead and give it a thumbs up. Make sure that you're throwing down some interaction in the comments. I'd love to hear what the worst part of your week was when it comes to investing. I always like to interact with all of you. Have a fantastic weekend. We'll see you on the next video.